Well, happy Monday. It is July 17th. Want to bring you the latest news here in the Austin metro area. By the way, I'm in sunny Port Aransas, Texas, taking a little reprieve from Austin. This is one of the reasons why. So we've got a few headwinds in the market right now. One of them is just excessively high temperatures. This is the 7-day forecast coming up. 107, 108 degrees. That doesn't even include the heat index. So this is just putting a lot of downward pressure on people wanting to go out and do anything, even if buyers want a house hunt. Doing it in 107 degrees isn't always fun. And so we're seeing numbers at open houses and numbers of showings per week coming down. Some of it is due to this. The other side of that coin is interest rates. So this line right in the middle is 6.8%. So if I come all the way back here to about mid-May, May 18th, let's call it 2 full months, we've been at or above 6.8%. We've had a couple spikes that have gone up over 7%. Last week we hit 7%, but it's come down. It's just very volatile. You can see they're bouncing around. We're watching every piece of data, inflation reports, CPI, all that kind of stuff. Every time a report comes out and shows that inflation or the job market is hotter than normal, what happens is interest rates go up. If we start to see data that's showing inflation is cooling off, the rates start to come back down. But they're hovering in this 6.8 to 7 range. And I think until we see that really break significantly to the downside, we're going to continue to have suppressed kind of buyer activity in the market. I'm going to show you the stats for June. These just came out from the Austin Board of Realtors. So the median home value actually did just trickle up over the course of the spring. We're now sitting around $483,000, which is just under 10% lower than where we were at this time last year. Average days on market, again, that's compared to last year, but we're sitting about 61 days on market, which means a typical home right now is going to take at least 2 months to get a buyer and go under contract. And months of inventory is still climbing. We're sitting around 3.7 months. Kind of depends on what neighborhood and what community you're in. I've got some homes on the market where we're in a stronger neighborhood where maybe there's only 2 or 3 months of inventory. I have other properties that have 6 and 8 months of inventory, depending on what they're competing against. So, it's not like it's one market. You got to really know the submarkets as well. But the market's hanging in there, but we're really starting to see the second half of that summer slow down. We held open houses at all of our listings this weekend. We had 10 hours total of open houses across 4 properties, and we had 3 total visitors. So, basically roughly 1 guest per open house. So it's very slow right now. Finally, I'm going to leave you with this one. This is a rental chart. So for those that own rental property, this is showing a year-over-year national rental growth change. And you can obviously see what happened during COVID. Now, the orange line is regular single-family homes, which most of you would, if you're a landlord, would fall under. The big blue line are build-to-rent communities. And so these are big home builders that have built a neighborhood of 300-400 homes, but they're treating it like an apartment complex. They're going to have a leasing center, and all those homes are for rent. None of them are for sale. So build for rent has been a popular trend since COVID started. But of course, they peaked way up on rents and then have kind of collapsed back down to flat year over year. The single families on the orange went up to about 7.8. They're back down to about 4.7. Not a huge change. Again, this is national, but it just shows you it's a little steadier on the single family homes. And then finally, you have apartment rents, the big green line, again, following that big bell curve. So we're seeing everything post-COVID come back to normal. That big COVID swell is over. It's crashed on the beach. We're kind of returning to normal. And I would even say with the higher interest rates, it's pulling us down probably a little below normal as well. So if you're a seller right now, just know activity is going to be slow. The temperatures are hot. There's not a lot of buyers in the market taking action right now. And so, A, we need to be patient, but number 2, we really got to make sure we have a great price because you're only going to get so many showings, and each showing is that much more critical to try to get an offer from a buyer. If you're a buyer right now, hey, you've got a window. If you're willing to go out in the hot temperatures and write offers, I've got 2 buyers that went under contract this last week. So the buyers that are taking action are getting deals. They are able to go under contract and find some great properties right now because they don't have that buyer competition. That can all change when temperatures change and interest rates change. So pay attention to those two factors right now. I think that's kind of driving the market. Anyways, I hope this is helpful. Please make sure to check out our YouTube channel. You can check out Ryan Kelly Group on YouTube. We'll be posting these videos every week there. Until then, I'm going to go have a margarita, even though it's 7:50 in the morning. And I'll talk to you guys next week. Take care.